Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries behind corporate power plays and sometimes unearth a few surprises. Today we are diving into an interesting little financing deal from Sterling Real Estate Trust. But don't let the real estate trust fool you. This is less about bricks and mortar and more about the financial grease that makes the wheels turn. You might be surprised what we find when we look beyond the surface. And before we get into the nitty-gritty, if you love getting clear, no fluff insights from company fillings, hit that subscribe button now. Also, we've got a fantastic community over on our Discord server, linked in the description below, where we break down even more of this stuff. Alright, so Sterling Real Estate Trust, or Sterling Multifamily Trust as they are also known, has just inked a deal. And this isn't just any deal, it is a significant financing arrangement that will affect their operating company. Think of their operating company, Sterling Properties LLP, as the workhorse that actually handles the properties. So, this recent filing tells us about a new line of credit. What we're looking at here is essentially a credit agreement and a commercial guarantee. The credit agreement is the main deal where money is being lent, and a guarantee agreement is like a promise that someone else will pay if the main borrower can't. This happened on the 21st of November 2025. Here is the big number, folks. Gate City Bank is providing a $20 million revolving line of credit for their operating partnership. Now, what does a revolving line of credit mean? It is basically a flexible loan. The operating partnership can borrow money, pay it back, and then borrow it again, up to that $20 million limit. This is super useful for managing day-to-day expenses and for snagging new investment opportunities as they pop up. They plan to use this money for their regular operations and to help them buy more properties. Makes sense for a real estate company, right? This agreement is set for 3 years. So it is not a super long-term commitment, but it gives them a good amount of time to work with this new funding source. Now, let's talk about the cost of this money. The interest rate is variable, meaning it can change. It is tied to the prime rate, which was 7% on the day the deal was made. Then there is a 1.5% reduction, bringing the initial interest rate down to 5.5%. That is a pretty decent rate, especially if the prime rate stays stable or goes down. Now this is where it gets a little bit odd. The filing actually mentions the exact same deal twice. It is structured almost identically, detailing another $20 million revolving line of credit from Gate City Bank to the operating partnership. However, there is a slight difference in the interest rate calculation for this second identical sounding agreement. Here, the prime rate of 7% has a 0.75% reduction, leading to an initial interest rate of 6.25%. So, we have two mentions of a $20 million credit line, but one has a slightly higher interest rate. It is possible this represents two separate but very similar credit facilities, or perhaps some nuance in documentation that the filing itself is trying to clarify by repeating it. Given the structure, it is most likely they have secured two separate credit lines with the same bank, perhaps for different purposes or under slightly different terms that were important enough to spell out separately, even if they both lead to a similar overall funding pool. The company is telling us that this summary is just a taste, and the real details are in the full agreements attached as exhibits. They also caution that all those legal promises and guarantees within those agreements were mostly for the bank's benefit, and investors shouldn't take them as absolute truths about the company's actual situation. It is a standard disclaimer to protect themselves. Looking at the exhibit section, we see Exhibit 10.1 and 10.2 reference a credit agreement, and guarantee likely the first version we discussed. And then we have Exhibit 10.3 and 10.4, again a credit agreement and guarantee which would correspond to the second, nearly identical deal. It does seem like they were layering on financing here. This filing essentially tells us that the company has taken on new debt. This falls under the category of creating a direct financial obligation. They are borrowing money, and that is a direct financial commitment. So, what is the story here? Sterling Real Estate Trust, through its operating subsidiary, has secured a substantial amount of flexible funding. The fact that they are getting two similar credit lines might indicate a strong need for liquidity, or simply a strategic move to maximize their borrowing power. The slightly different interest rates on the two facilities are worth noting, suggesting they might be optimizing for different uses of funds or have negotiated slightly different terms. The total of $40 million in potential borrowing power gives them a significant financial cushion for operations and acquisitions. This is a pretty standard move for a real estate company looking to grow and manage its cash flow. But securing it from the same bank in what seems like two very similar packages is interesting. It shows a strong relationship with Gate City Bank. The reliance on variable interest rates means they are exposed to potential increases in borrowing costs if interest rates rise, which is a key risk to keep an eye on. Ultimately, Sterling Real Estate Trust is demonstrating a proactive approach to financing its operations and growth. The $20 million revolving line of credit, and potentially another $20 million, provides them with the flexibility to navigate market conditions and pursue strategic acquisitions. The key takeaway is their enhanced ability to deploy capital. The main risk is the floating interest rate, which could become more expensive over time. For now, it appears they've secured a solid financial foundation for their upcoming activities. Alright, that is our breakdown of Sterling Real Estate Trust's latest filing. What is your take on these financing deals and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.